So Jared, we have a well tank here, and if I have well water in my house, tell me what this first component of the complete system does.
Well, this is what we consider the starting point. You know, your water comes into your house if you're on well water.
Yeah.
There's a pump down. You have a pump down in your well, which is out in your yard, which white PVC pipe typically goes to this tank. This is a or commonly known as a well tank. So water just gets pumped. Water reserved for your house. It'll fill up, and then as you use water, this is where the water comes from. Obviously, it's untreated at this point in time, but this is the first stop of your water from your outside well.
So after it gets into this, and then you use water, let's say in your shower, water comes into from the well tank, and where does it go next?
Then we're going to get into filtration after this. What it'll do is the well water gets pumped in here. You turn on your faucet, you're washing your hands and stuff like that. What ends up happening, Adam, is there's a bladder tank in here that helps keep the pressure pushing it up to your faucet. And that's how this works. And then it goes to your filtration.
So now we finished with the well tank, and here we have pre-filtration. Jared, what does this do?
This can be installed, Adam, on both city water or well water. And what it does is if you have high iron rust where you just can't get rid of, and you've got a typical water softener that isn't filtering out, this would go before the water softener. It'll filter out the high iron. Also, if you have arsenic, which you've heard a lot of nowadays, this will filter out arsenic and other contaminants. On city water, it'll take out chlorine. Basically, a lot of people refer to this as a whole house Brita filter.
So Jared, these three components right here, it looks like it's the meat of the system. Tell me what this is.
This is what most people are going to relate to. It's a water softener. So it's going to take out, Adam, the hardness, calcium in the water, and it's basically going to protect all your appliances so you have soft water.
And how does this work? Like, what? This is for the salt, obviously. How does this work?
Basically, what you have is these are available in either single or twin tanks, depending on what.
Ready with the dump button.
Good morning. This is How You're Done. My name's Adam Helfman, and welcome to the show. We have lots of content today. In fact, we are going to blow this up with one more and most important concept of home improvement, and that is, how are you going to pay for that project? That's the key, and that's the theme of today's show. And for all you tuning in for the first time, my name's Adam Helfman. I'm a home improvement expert, been around for 3+ decades, sharing my knowledge with homeowners on how to hire a contractor without getting burned. That's right. I want you to have hassle-free home improvement, and that's the case, and that's the way we do it here at Hire It Done. So if you're looking for a contractor, one that shows up, one that's licensed, insured, and vetted, let me tell you, folks, HireItDone.com is the place to go for the best contractors in Metro Detroit and Metro Philly, and growing around the country, all around there is. So what's going on with you today? Well, let me just give you a little bit of advice. First, grab your coffee, grab a pen, grab a yellow pad, get ready to take some notes. Join the conversation this morning. I'm inviting you in, okay? Join the conversation with us so that we can help you find the best contractor. And today we're specifically talking about home improvement financing, okay? How are you going to pay for it? And when do you get the financing? Do you find the contractor first, or do you find out how much money you have to finance the project? Look, a kitchen today, 30, 40 grand on the low end. Americans are projected to spend over $600 billion on home improvement, with the average major project being around $24,000-$25,000. The average mortgage holder in America is sitting on roughly $194,000 of tappable equity, collective equity of about $18 trillion. That's some serious numbers, my friends. So a HELOC, which is home equity line of credit, or home equity loan rates, they've been trending down since late 2024. And here we are in 2026, and they're currently averaging around 8%. But remember, if you have that 2, 3, 4% mortgage, an equity line of credit is using that equity, and that's where that rate is. And we're going to define all that, demystify it. I'm going to have all the answers for you right here. In fact, if you have a question this morning, all you got to do is text us 248-927-1985. Again, 248-927-1985. We're going to be here all morning to help you out getting the right stuff. And so if you think about it, we're going to fix all your home improvement financing questions. And how are we going to do that? I've got two gentlemen joining me this morning from Rocket Mortgage, Brian Baumann and Chris Osterlund. These folks do this every day, okay? They know how homeowners are paying for projects in 2026. They keep their finger on the pulse, and they know what's working and they know what's not working and how to set yourself up so the financing doesn't sink your dream. Brian and Chris, welcome to the Hire It Done radio show.
Thank you.
That's an introduction right there.
Yeah.
You like that?
I like that.
So I'm just, let's set the table and let's set the tone for the interview. Brian, let's start with you. Tell our listeners who you are, what you do at Rocket, and how you got into this business.
Something I appreciate the time. First, I want to say hello to somebody new out there in Philadelphia, hanging out at WMMR. So
right,
everybody in Philly, hey, what's up?
You guys do a lot of work out in Philly, don't you?
We do. Actually, we do one of our bigger markets out there in Philly. So that's exciting stuff. But let me go back. Everybody has a dream. They start off somewhere. A lot of people want to become astronauts, police officers, firefighters, even. My dream was a mortgage banker. Actually, it was Batman. I wanted to be Batman. But
no one's seen you and Batman in the same place.
I used to have Batman underoos.
Really?
Yeah, that was by the extent of it. So, but, you don't dream about getting in the mortgage business.
You didn't dream about that?
No, I did not.
So
I kind of fell into it.
Let's hear how you fell into it.
I was graduating from college, and a friend of mine knew Dan Gilbert and Gary Gilbert. They're starting a little business called Rock Financial. It was 10 years in at the time. I think I was employee number 170.
How many employees you got now?
30.
Over, yeah.
Well, we just merged with some big companies. So
we have tens of thousands, probably 25 to 30,000.
Wow. And you were an employee under number 200.
Yeah.
And you've been there how many years?
I just celebrated 30 years with the company. Yeah. So I've seen a lot of things happening with interest rates and mortgages. Obviously it's to be with the company that long, it says something about the company.
Of course.
So
yeah, and I get it. I totally get it. Chris, big picture.
Yeah.
What are you seeing right now in 2026? Are homeowners actually pulling the trigger on projects, or are they setting up their brands and waiting for rates to drop?
You know what? We're actually seeing more folks start to let the news sink in. So what tends to happen in our world is people hear the news, and even when they hear rates are going down, the effect of that sometimes takes a little while. So I think rates have been coming down long enough now where people are starting to realize, okay, now might not be a bad time to make a move. So we're seeing a lot more people come into the market to buy right now. We are seeing a lot more people reach out to start some of the home improvement projects. What's interesting is some people start the projects right before they decide to sell and move, and they never get a chance to really enjoy the kitchen or the house, the upgrades that they do. But you're starting to see more and more of that stuff happen because news of interest rates kind of settling down a little bit has really sunk in, and more people have started to understand that 2, 3, 4% isn't normal, and seeing a rate that has a 6 in front of it actually that's considered normal. And so now that you're hitting the lower 6s and maybe there's a 5, out there as far as the interest rate goes, you're getting more people who are starting to make moves.
Brian and Chris, and we're talking with Brian Baumann and Chris Osterlund from Rocket Mortgage. Here's something I tell my listeners every week. Figure out how you're paying for the project before you pick out your cabinets. From your seat, what's the number one financing mistakes homeowners are making right now?
I mean, that's it right there. Do you want to sit down and talk to a contractor and give them your wish list and then be disappointed? I don't think that's usually the best way to do it. I think making a phone call, figuring out the financing, we might look at your setup and say, hey, here's how much equity you can access, might give you a payment. And you might say, that's a little too much. Right. So you may have access to more equity than you really feel comfortable paying for. So having a conversation and understanding, okay, what leverage do I have is a great place to start, because then we can give you a budget and say, okay, you feel comfortable with maybe spending this much per month. Cool. That'll get you about 50 grand, or that'll get you about 80 grand, or that'll get you about 100 grand. Then you can sit down and look at the house and hire a couple of contractors to come in and take a look at it and say, okay, here's what I have to work with. Here's my wish list. What can I get done? And then you have a more reasonable conversation where you don't get your hopes so high with all these things you want to get done, and then you're not really prepared to do it. So I think you nailed it when you said, get the finance, figure out how you're going to pay for it first, figure out what your leverage is, then sit down and find out what you can get done.
So, Brian, let's give the folks a real menu here. Walk me through the main ways a homeowner can finance a home improvement project today. Now, and then we'll talk about what each process. I've heard of 203K loans, and it's, it sounds promising, but it's the paperwork's a nightmare. You're jumping through hoops. It's a headache. HELOC, which is home equity line of credit, different than a home equity loan, correct?
Correct.
Okay, so there's two right there. Cash out refi.
Yep.
Is one. Those are the three. Let's just take those three right now. So, Brian, in the HELOC or home equity line of credit, who's that for?
I'm gonna advise everybody that's listening to this program right now. There's a few things that you should do immediately. One of the first things that you should do, if you own your home free and clear, get yourself a home equity line of credit,
even without using it.
Even without using it.
So it's like a checkbook that you write checks against your home.
If you're going to use it, and if you're going to use and abuse it, don't do it. If you have a problem spending, you like going to the mall and spending money. If you're going to use it for a vacation and pay it over time, this is not for you. If you're a person that is not scared to carry credit card debt, this is not for you. But if you're that person that all of a sudden the daughter's getting married, you need quick cash, you don't want to take a capital gains hit this year. You want to take it over to the next year. This is for you. Can I give you a real life example?
I would love something. Are you kidding me?
This just happened to me. So I got a phone call from, and being in the business for over 30 years now. You deal with not just a certain client, but you're dealing with their kids and their kids' kids. So anyway, the client calls me up. He's panicked. He wants to get an equity line. He wants to get it quick. I need to close it in a week. And even by the tone of the voice, there's something up. What's going on? Well, he started a construction project, has the cabinets tore out, sinks torn out, appliances are torn out. And all of a sudden he realized that he sold a bunch of stocks. He did his taxes and he's taking capital gain. He's having a big tax occurrence here, and he doesn't want to do that again. And he thought he would be able to manage it, because and I'm sure you've heard this from your folks. If you plan a budget and you start ripping out, you need to plan for more.
Well, of course, contingencies.
Yeah, things cost more.
People don't realize that that's so important.
Always add 20% to any project you're doing. But at any rate, he wanted his home equity line.
So let me ask you, if you're saying add 20%, let's say I have a $50,000 kitchen.
Yeah.
Okay. And I have plenty of equity.
Yeah.
Are you recommending that I get approved for 60,000, which is 20% more?
1,000%.
Okay. And I agree with that. By the way, that's really good advice.
Yeah. You know why you can't, once you do it, a lot of people
can you increase it later, or
but then it's
more paperwork, more cost, more fees.
You're better to take more
And use less. Okay, cool. Well, you know, it's a risky double-edged sword for me. But we're gonna keep this locked in here because I want to let you know that this is good information. If anyone has a question, text us. We have shout out Saturday. If you're a contractor, a homeowner listening, you want to shout out, text us 248-927-1985. If you have a home improvement financing question, we are here to give you the answers. We have the boys from Rocket Mortgage in here, serving all of the United States. And so we're going to take a quick break. And when we come back, we're going to get you financed the proper way for your home improvement project. My name's Adam Helfman. This is Hire It Done on the Hire It Done Radio Network.
Have going on here, it's 3, 4, maybe rolling into 5,
if not more.
If not more, when we're talking about finishing details and punch list items. So it is a lot to prepare for. I don't think any client is really prepared until they get into it.
Right.
But our job is to try to help them, especially when we're working throughout the house, is trying to phase things in. If we can stay out of one area until we need it, then we'll kind of, matriculate the project through the house as needed. But we also have garage space that we're taking up, so clients have to park in the driveway, and it's just things that you don't necessarily think about until you get in the middle of it and you're like, it's snowing and I'm parking in the driveway. It's like, yeah, we got to keep our tools and things like that in the garage.
Yeah.
So just little things to keep in mind.
That makes perfect sense.
Yeah.
In fact, another tip for homeowners, when you're planning a project, and understand that you live in your house, you come home, it's called your comfort zone. Mm-hmm. This is a project right now that I'm visually looking at, is prepared, is got traffic flow, is protecting the house, but it's an invasion of the homeowner's comfort zone.
100%.
You need to be prepared for that mentally and every other way. So kudos to you for protecting the house like this and seeing how it is. I'm excited to see when it's all done, and we'll get the before and after pictures, which are great. So how often do you communicate with the homeowner during a process like this? Is it daily, weekly, or is it depending on the homeowner's needs?
For our clients, every client gets a weekly update. So they get a recap of what we did last week, what we intend to do next week, and kind of where we think we are, some things to expect. A lot of clients work from home. Our clients here, they work from home a few days out of the week. And so if we're going to be doing electrical and internet's going to be down, we want to try to give them a heads up. If we've got plumbing that's going on and water's going to be off, we want to give them a heads up. So we try to keep them abreast of some of those things, but it's still always a circus depending on.
But that's okay. And again, we always say at Hire It Done, and Veronica is really good at this. The key nucleus of successful home improvement is communication. So when you communicate with your homeowners on a regular basis, they always know what's going on. Even if you say to them, hey, we got nobody coming for the next few days, it's okay.
Yeah.
So they know, and sometimes they're relieved. They're like, oh, good. I can catch my breath for a minute.
Yeah.
However, there's also times in the beginning of this interview where Veronica said, we might as well. This job has evolved. How important is it to communicate with homeowners when they keep adding things, or they say, hey, you know what? I want to do this, but let's do the other side of this as well.
Right.
The timeline.
The timeline is something that is very important to communicate. It's probably the number one question that we get, because there's so many horror stories throughout the neighborhoods and construction.
Always.
It's like, oh, these people, they're going to take forever. It's like, yeah, we're thinking this could be 12 weeks. We're thinking this could be 15 weeks. We're thinking this could be whatever. But odds are it's probably going to be more because naturally people they add things to the project, or there's material that gets delayed. There's a problem. There's always things that come up. So for me, I think it's always important just to have a firm that can handle the problems and a firm that can deal with the things that come up and try to see them ahead of time, So what she just said was so crucial that I want to reiterate that again.
finding a firm that can solve those problems, we call it solution-minded on Hire It Done. And this is why Veronica Simmons is such a great contractor, is because she'll solve the problems as they come up. When homeowners add things, they're like, oh, it's just a little thing. Well, they don't realize the domino effect of that. And is it right for me to even say that?
Correct, 100%. This fireplace here is a perfect example of something that we had to problem solve. We weren't going to do the fireplace when we started the project. And then kind of after everything was sold, the client says, okay, I think I want to do the fireplace. So the way the fireplace is focused around both sides of the kitchen and the family room, we had to troubleshoot what we were going to do with the floor, because the ledger stone is going to come all the way down to the ground. We didn't want it coming from wood to carpet. Right. So we ended up coming up with this really cool inset design, but that took a lot of thought and thinking, and we were going back and forth trying to figure out the best solution. So it takes planning. Time on design and time on actual implementation.
So here we are up the new master bathroom, which is another add-on to the bigger project. Yeah. And so that's one of those situations where we've talked about earlier, we might as well. In this situation, because this homeowner knew they had an A-plus contractor, that they said, you know what, while you're here, the dust and everything's already here, let's get it going and let's do the master bathroom. So Veronica, explain to the viewers exactly what we did in here.
Sure. So while downstairs, in the kitchen, the footprint really remained the same. Up here, the clients really wanted everything to change. So what we're looking at a vanity where a shower was. We used to have a jetted tub over in the corner over here that now is part of a massive shower, wet room kind of combination. We've extended
Welcome back. This is Hire It Done. My name's Adam Helfman. Shout out to all our guests in Philly and listeners today, and shout out to my Detroit audience. Today's a great day. We have the gentlemen from Rocket Mortgage in studio, Brian Baumann and Chris Osterlund. Welcome back, gentlemen.
Thank you.
So let's get right to the meat of the things, my guys, and let's figure this out. Homeowners, let's talk numbers, okay? What kind of credit score, equity position, and income does a homeowner realistically need to qualify for the best rates today? It's basically the ingredients of what you need, right?
You know something, the better the score, the better the deal. Better the score, the better the deal.
Just like location. That's what happens.
That's right.
The better your credit score, the better your credit. So, okay, is there an average credit score in America? 700, 750,
it's
600?
It's probably upper sixes. Like the most helpful thing to probably give people are the benchmarks. You know, if you're around 600, you're on the lower end, and it's not the greatest scenario to be in, but you could probably still get a loan if you have a good amount of equity.
We could do 620. Can we?
Yeah. We there's, you know, once you're around 600, we can either potentially look at getting you a loan or help nudge you to where you might be able to get it, as long as you have equity. So if you have a low score, but you have a lot of equity, there's going to be more options.
So this is where the question is that's why someone should call you guys, because you can take a look at the whole big picture and advise a homeowner. Here's the right roadmap for you to stay in your house and do it right.
Yeah. And for people to understand the next benchmark, 680 to 720 is kind of where you transition from that fair to good scenario. So just so everybody has a benchmark, because some people think, oh, you got to have 700. Well, yeah, it really helps. But 680 to 720 is that transition from you have fair credit to good credit.
Sure.
And then upper sevens is excellent.
Let me ask.
Let me give you an example. Let me give you an example. So let's say you want to borrow $50,000. I've got my calculator here. Did some quick calculations. You can amortize this $50,000 over 10 years, 20 years, 30 years. A lot of my clients like to have the lowest payment possible and then pay more as they wish. So if you have a 800 credit score, that payment will be, say, roughly $300 a month
for 50 grand.
For 50 grand.
Okay.
You have
sounds like a great deal.
You have a lower credit score. That same payment be $380 a month.
Okay. So I see what you're saying. So again, back to what you said originally.
That's right.
The score makes the rate. Homeowners hear closing costs.
Yeah.
They get nervous.
Yeah.
What does the actual cost of getting one of the loans look like? I mean, application fees, appraisals, all of it. Let's use it. Give me a $100,000 loan, and you've got closing costs. Is it 3%, 5%? What is it usually in there?
I mean, it depends on the type of loan you do, but if you want to get into something that is a traditional mortgage, it's going to be a little bit more expensive than just a home equity loan. If you get a home equity loan, lines of credit, they can be $1,500. Sometimes you don't need an appraisal. So there are some variables, but I mean, 1,500 to 2,500 is probably par for the course. Yeah.
And so that's what, because involved in creating a loan, paperwork, getting everything done, it involves a handful of people.
Yeah. I'd say 20 hands may touch a loan throughout the process.
The way we do it, what we do for Rocket's a little different. We have a smaller team that works on all of our stuff. And so we keep it a little bit tighter to the vest. But one of the things that we've done as a company very well is we've kind of spread the duties out and created almost an assembly line and a really smart system behind it where people touch the loan as it's needed to move it through very quickly. We've simplified that, and we have a very close group that we work with personally. But yeah, you might have a decent amount of people that touch it just to get things through and do it efficiently and move it along fast. But yeah, 1,500 to 2,500 is probably a good basic number to lean on. But at the end of the day, it depends on what type of loan you get. Like Brian was saying, and I just did a little bit of quick math on 50 grand on a 30-year loan, you got a payment of 366 versus 476 with a 3% difference in the interest rate. That's the difference between 8 and 11%. So, I mean, it's $100 and some change, depending on whether you have great credit or not the greatest credit. So I just figured that would be important because you can get access to money to do things to your house. Credit's important, but it doesn't mean that you can't get something done. And the interest rate's obviously important too. And over 20 or 30 years, yes, that extra $100 a month adds up, but you can get the project accomplished. And one of the biggest things Brian said is a 30-year loan doesn't have to be a 30-year loan. If you hate the interest that you're paying on it, you want to pay it off quickly, pay it off in 4 or 5 years, add more to it. That's no big deal. But that's roughly what you can get for 50 grand. And depending on your credit, the difference in payments, not astronomical. So you don't have to have perfect credit to get the kitchen done, things like that.
Totally get it. Makes sense. And that's great information. 248-927-1985. Text us if you have a question for Brian and Chris. Here's one I want you guys to hit for me. When shouldn't, keyword shouldn't, a homeowner borrow against their house? What are the warning signs that they should pump the brakes? Chris, you start.
So there are a few places you can get access to money. You can always do credit cards, cash advances, not usually the most efficient way to get money. You can do personal loans. Those are going to tend to be high teens, 20, better than credit cards, not really that good. Mm-hmm. Then you have your mortgage, like home equity loans, or just refinancing the primary loan. Or if you don't have any mortgage on it, just doing a regular mortgage on it. If you do a regular mortgage, your rates are in the 5s and 6s. If you do a home equity loan, it's probably 8-9%, something like that. Those are all better options than the alternative.
How often does a homeowner come to you looking for a loan and you advise them, even though they qualify, and you say, look, this is not the right loan for you, and you give advice to move elsewhere?
Affordability is probably the biggest X factor. If you have a dream to do something to your house, there are other questions that go along with that. Like, are you doing this for you? Are you doing this to make money on the house? Is it going to build value or not? So there are some of those considerations. But at the end of the day, if somebody has something that they want to get done to their house, it impacts their life in a positive way. It's either going to build value monetarily or build value emotionally.
Sure.
Then somebody should do it as long as it's affordable. So I think that the line in the sand is like, hey, if somebody wants to say, hey, I want to, take this tile and turn it into hardwood because I want to sell my house for more. It's like, okay, hardwood in the whole house might cost you 30 or 40 grand. Your house isn't going to sell for 30 or 40 grand because you got hardwood. So that's probably not a good thing to do. Your real estate agent will give you advice on the comps and what's out there, and they'll tell you what the right renovations are. But if you're trying to do this to make money, that might not be the renovation. So you could tell somebody, hey, maybe that's not a good idea then. And the other barrier would just be affordability. If I look at somebody's finances and I see, what they want to get done, what the payments are, and what their life is going to look like financially after they do it, we might have to sit down and have a real conversation of, hey, I could do this for you, but here's what your payments are going to be. How is this going to feel when we're done? that's maybe the only other time there might be a line in the sand that you should have a conversation. And Brian and I have been doing this for so long. I mean, that's the benefit of working with somebody who's been doing it for a long time. We're not hungry to chase just another client to work with. I mean, we're happy to tell people, hey, this isn't a good move. That's fine. We have plenty of people. We've built a great business, and we always have great clients that we work with. So working with somebody who can give you advice impartial to their own benefit is a huge win too. That's where you have some of those tough conversations.
You know what I've seen that some people do, which I think is a huge mistake, is over improve in a market that doesn't support it.
Oh yeah.
So
give me an example when you.
I got a great example for that.
If you're going to put solid gold toilets in a house and just go,
but if you're
Gucci,
planning on,
let me use you as an example. Go to Gucci and use wallpaper. Get Gucci wallpaper. They have wallpaper for Gucci.
I have it in my house.
there you go.
Does it have a texture?
But if you're in, if your house is worth 100,000 and you're spending 100,000 on a bathroom because this is what you want to do, over improving in a market that's not going to support it, you're just throwing money out the window.
Hey,
interesting. Let me hear your example.
I won't forget it. So I have a gentleman who we were helping with a refinance, and we did his appraisal, and he told me up front how much work he'd done to his house. He's very proud of it, and based on the comps and stuff, I mean, in the upgrade and some of the things, he said, well, it makes sense. He could probably get the value that he wanted. Well, we did the appraisal and it came in a little bit low. And that, that happens. I mean, especially with a refinance, depending on your upgrades, client's opinion of their home, it happens. And so his house came in a little bit lower than he thought. And when you're refinancing, it's really, we talked about it up front, and bottom line is he was adamant about his value. So I said, well, we'll give it a try. I don't know that it's there, but we'll give it a try. And he had put like Italian marble into his whole entryway. And when we looked at the appraisal and we looked at the other houses, and then we looked up houses online too that were listed for sale. And I said, man, there's nobody who has Italian marble. He goes, well, I spent $130,000 on my entryway.
This is what I'm talking about.
And I said, yeah, but your Italian marble versus regular marble versus tile, that other houses have beautiful entryways. That 130 grand you spent on marble, no one's going to pay for that. But you have a 2,600 square foot house. Other 2,600 square foot houses are selling for what they're selling for, and your 130 grand's not. So the point is, you can over improve your house. You can do the wrong things. And you know what? Sometimes that's okay if it's your forever home and you're doing it, it's just for you and you want to love your home.
If you're going to leave it feet first,
do
the marble.
Yeah, exactly. So there's a time and a place where you say, I don't care about return. I just love my home. But, that's where the conversation with us.
So the scenario, homeowner says, look, I own my house. I'm never moving. I want my $100,000 bathroom. I don't care.
Yeah.
Then you're like, okay, enjoy it. You're gonna die on that toilet.
Might as well have a bidet.
You might as well have it, right?
Yeah.
Okay, that's fair.
I'm a big fan of the bidet.
Yeah.
So let's talk
big
about
fan of the bidet.
There's a couple good versions, by the way. Toto and Kohler make the best.
I know.
I have a Kohler.
Is it all in one unit?
Yeah, Numi. It's called the Numi, Numi, and I have a Kohler Veil, Veil, in my house. I'm a Kohler guy.
Yeah.
So you can look them up. Heated seat too.
God, I gotta do it.
So you can really make a bathroom a palace if you needed to.
I'm on social media when I'm in the bathroom. No. So what about tax deductions? Can you deduct the taxes on the equity line or the improvement, or is it more just basically how it works?
We'll leave a lot of that to the CPAs because everybody's tax situation is going to be a little bit different depending on whether or not they can take the individual deduction. The high standard minimum now kind of takes away a lot of the need for some people to do it, but other people can still benefit. But at the end of the day, interest is interest against the house. You can certainly.
You know what my CPA said? Mortgage, the deduction on mortgage interest. It's like, well, if you gave me $10, I'll give you back $1.
Yeah, you don't want to give the $10 if you can avoid it, but there can be a little bit of a benefit.
Back $1.
Yeah. I mean, doing it against the mortgage, if there's a chance where you can be in a tax situation where you take advantage of it, there's that benefit. But it's also, like we said earlier, usually the cheapest place to borrow the money. That's the big win. Is
Sure.
I don't understand when people want to do home improvements and put it on a credit card.
No,
I just don't get it.
The miles.
Yeah, if you're going to pay it off, that's one thing. But
But think
you
about
know.
it. Here's the deal.
And why did credit card interest rates? How come they don't get a bad rap when they charge 22%? How come
They do a better job of marketing and
How come nobody's protesting that?
protesting.
I mean, that's
You can
mafia
start-
rates. That's Tony Soprano rates. Credit card debt.
Start
Credit
the
card
movement.
interest rates.
Start the movement.
We
How
got to
about
start a movement.
Hard money lenders.
Oh yeah,
They're back.
They're beyond the
They're
credit
back.
card companies.
Yeah.
Trust me, they're like the bookies. So let me ask this question to you guys.
Stay away from hard money.
Right, of course. If someone needs to get a hold of you, what's the best way for them to contact you?
I'm going to give them a direct line 248-417-0547. And
They'll call
everybody that's listening, anybody that's listening, they're going to be part of our local program at Rocket. We're a specific group. It's not like you're going to be calling the 1-800 number. This is a direct line to work with our local team.
But your local team is nationwide, though.
Well,
You'll do
we
it in
are.
any city.
We're-
You'll do any state.
Our
Any
group's a
state.
little unique. Yep.
Yeah.
But we do have loan officers that work for
Specific.
us in the community in areas all over the country.
yeah.
So it's a little bit different than the retail call center. If you want to meet somebody face to face, in a lot of areas, we employ people that will go meet you, and they do more face to face relationship style stuff.
Interesting, because
Yeah.
we have a big audience in Philadelphia.
Yeah.
They're going to be calling you. You can. How often do you guys do Zoom calls with homeowners?
All the time.
Is
All
it
the
a
time
standard
now.
thing? Zoom
Oh,
became
yeah.
automatic, right?
Yeah, Zoom's easy. Now you can do Zoom, you can do FaceTime, you can do phone calls. There's a million different ways for people to connect now.
I really feel as though well, working with friends, family, and I'm very passionate about my clients. Is it's such a personal experience, especially home ownership.
Yeah.
It's where your family is, your holiday parties. It's
Yeah.
such a personal experience that I love making that connection. There's three people in it, and when you're buying a home, there's three people you need to trust: your realtor, your interior designer, and your mortgage guy.
Okay.
Got to trust those three people. Lean into them heavy. Use their expertise. Use their knowledge.
And then once you're over that, you've trusted them and you got your house. The next trust is your contractor.
Oh yeah.
You got to have a relationship with your contractor.
Now, do you guys ever ask if the homeowner says, "Listen, we're putting an addition on. We're spending $300,000 on the house, and we only got $200 from you because that's all we could get. But I have extra money, cash set aside for it. The combination of cash and refinancing or equity line." Is there ever a time when the homeowner gets into a fight with the contractor and they stop paying you guys, or is it completely separate? And you don't even keep it involved. You don't keep it connected.
No, I mean, at the end of the day, once our, deal is closed and we're able to provide, the cash that somebody needs to make a move, that's pretty much done because it's another mortgage.
Sure.
And so for us, unfortunately, you see this more with cars. Somebody has a problem. They buy a car, something goes wrong with it. They take it to the dealership. They go, I'm going to stop paying for this car. They got to take it back. And they go, no, you made a deal with the bank. You owe the bank 30 grand still. I don't care if the car doesn't work. The banks finance the car. They still want their money, but some people react that way with cars and they go, I'm just going to stop paying for it. With a mortgage, you don't see that as much.
Interesting. So let's give a scenario. I just want to know, how long does it take to do an equity line of credit or a cash out refinance? So the scenario is homeowner has plenty of equity. They want to do the $50,000 kitchen. The money's there. They call you guys from the show today. It's, mid-end of April, and they want to get started right away. Where are you guys in the timeline from application to the writing a check for the deposit to the contractor?
We like to under promise and over deliver.
Yeah, but is there an average?
Say 2 to 3 weeks, and then if we can knock it out in 8 to 10 days, that's great. But 2 to 3 weeks is what I would typically tell people to plan for. Just like, not having enough money for your project, it's a contingency. 2 to 3 weeks cash in the bank. That's probably about right.
Adam, let me ask you a question. Chris, I'm going to ask you to chime in a second, though. I get this a lot where I'd be talking to, and this is, I've been through this scenario multiple times where the client doesn't want to start the finance part of it yet, right? because they want to talk to multiple contractors.
Sure.
So they kind of know what they're going to do. And my advice is, let's just start working on it, because we can all, I always ask my client before close, okay, especially with home equity lines, that, okay, we're getting ready to close. Plane's coming in for a landing. You said you wanted 100,000. Do you want me to lower it? Do you want me to higher it or increase
Raise it? Yeah.
Increase it. But most of the times, and Chris, tell me if you get this, they want to wait till they committed to that contract. And then all of a sudden it's like, okay, we're starting Tuesday.
Yeah, I mean,
I'm like, let's get the financing out of the way so
Well, that's why you build the contingency. I mean, I think a lot of the times the people want to wait till the end. They're worried about financing too much. But, if you finance 10 grand too much, you just pay it back after you close. You pay the loan down quickly.
I know. Yeah.
But, I think as long as you have a contingency, most people are okay.
What would you advise your contractors? What would
that's a really, really good question, Brian. And it happens a lot. I tell homeowners, get the financing every time straightened out. And I'll have homeowners call me and say, Adam, I have an equity line of credit in the process, but I don't know how much I need because the contractor hasn't given me the price yet.
Yeah.
So I don't know the budget. Okay, fair enough. And that happens quite a bit. So for anyone out there listening, what's the order of operations? Go through the process of getting the equity line of credit going. Now,
that's right.
If you're, most homeowners have an idea in the back of their head. While they're applying for you, they can call a contractor and say, hey, I'm thinking of doing this kitchen. They can do this. But now with Google and AI and everything, they can type in typical kitchen with this granite tops, this and that. What's going to cost me in this zip code?
Yeah.
And you will get very accurate pricing. Now, a contractor doesn't want to come to your house and spend 30, 40 hours after he's met with you a few times and put together a proposal. If you're like, well, listen, I'm not sure I'm going to do this if I can't get the financing for it.
Yeah.
So where do you chicken or the egg? Well, something has to break. I tell homeowners, get your financing approved, because even if you don't do the equity line of credit, the contractor or the whole project, you still have that equity line of credit, because eventually you may say, you know what, I still want to do the kitchen. It's more than I thought. So I'm going to hold off. And I'm going to I say, if you hold off on the contractor, get the financing still. And here's why. Now you've knocked one check off your list. Now you got the equity line of credit. You don't have to use it. And if a year from now you want to redo it, rates have gone up or gone down. If they go down, can you refinance the equity line?
Yeah, you might get a little bit more money and not change your payment, or just lower your payment a little bit. But we started talking about a process, right? So we started talking about the fact that you want to talk to somebody about figuring out how much cash you have access to first. That way you have a piggy bank that you know that you're comfortable with. Then you talk to the contractor. We lock a rate for 30 days typically on these anyways. So for the client who says, I want to do this as a process, and I don't want to, I kind of want to make sure I do it the right way and take my time. We find out how much equity you have. If you know for sure that that's going to get the budget done, we can start the home equity loan or start the refi or whatever. And you have 30 days to talk to the contractor, finalize the budget, but at least, like you said, start your scenario. If you know for sure you're going to move forward with it, you can start your scenario. Then you have 30 days to iron out the final with the contractor. But if you want to get it done, you don't want to finalize with the contractor and then wait 3 weeks to get the job started. By starting the financing early, we can have it ready to go. Then when you finalize with the contractor or get close enough, we just tighten up the numbers and close right away. And then your project starts a week after you. So that's the right time.
I think it gets the ball rolling too. It gets people in that mindset that we are moving forward instead of the procrastination. Because, when people start seeing those numbers, it's scary. It's scary. But I think it gets the initial ball rolling.
Well, I agree with you. And so that's exactly why
it's a mindset.
You're 100%. That's why I always tell folks, get your money lined up before the demo crews show up.
Please.
That's important.
Please.
Now let's play devil's advocate. I'm the contractor. Mrs. Jones, we need to get started. Yeah. You're in the process with Rocket Mortgage. We have to get this going because of the time for your kitchen. I got to order cabinets. I got to get this going. But for all the listeners out there, don't forget, the contractor is not the bank. So he doesn't work for free. He needs a deposit. He needs money.
Material
costs. And there's, on a kitchen, let's just say the cabinets sometimes are 60% of the job, right?
Yeah.
So it's 30 grand in cabinets on a $50,000 job. So what does that mean? That means that homeowner needs to pay at least 30 grand to get the cabinets ordered. Those are usually prepaid.
Yeah.
So with you guys, it's almost like the contractor almost needs to communicate as well in a parallel, where you guys are first, contractor second, homeowners in the middle, but everyone needs to be synchronized on the same page. Do you often ever deal with a homeowner and say, the contractor wants to know what's going on, and you talk to the contractor?
Not really. I mean,
No.
listen, we'll talk to anybody that somebody needs us to.
Okay.
Everybody's a little bit different. At the end of the day, we can always be there to help. So if we need to talk to somebody, we can. It's we do it as a team. Our goal is to work with clients now and forever, and have them always feel comfortable calling us.
Of course.
So we help with anything they need.
248-927-1985. Text us in studio if you want a question about home improvement financing, where we've got Brian Baumann and Chris Osterlund from Rocket Mortgage. Everyone's heard of Rocket Mortgage, largest home lender in America.
We are one of the largest lenders in the United States. That's correct.
Good for you guys.
Yeah.
Based out
Household
of
name.
Michigan.
Household name.
Yeah. Metro Detroit.
Yeah.
Which is cool. Well, that's good to know. So if someone needs to get a hold of you guys again, you want to give the direct line, and you obviously any state in the United States who's listening.
You ready? 248-417-0547. Any questions? I want to help.
So we're going to take a quick break, and when we come back, we're going to go through different projects, what they cost, and what you think the monthly payment may be, just to give you a range. My name's Adam Helfman. This is Hire It Done, and you are listening to Hire It Done on the Hire It Done Radio Network.
That this really wants to be a sanctuary for our clients, and that's what a lot of people are asking for, is spa, sanctuary. I want zen, I want hospitality, I want it to feel like when I come home I can relax.
Interesting comment you just made, and I'm going to refer back to a recent podcast that you and I were on. And you have homeowners who travel. They go to a beautiful bougie hotel, and then they come home to their old bathroom. Why not make the spa environment? Why not have it done to the way you want it?
Exactly.
And you have the luxury to do that, and they have you to bring it to life.
Yeah.
I cannot wait to see how this is going to be finished.
It's going to be great. It's going to be great. We've got quartzite bench. We've got quartz countertops coming in, glass tile, tile that extends all the way through the wall. We've got body sprays in the tower. It's going to be fun.
Even the ceiling detail, I noticed, and the way the floor's tiled, everything here is intermeshed.
Yeah.
And it works. It's got a great flow.
Yeah, it'll be a fun space. So I can't wait for you to see it.
So Veronica, on a full master bathroom remodel, and this had a different design, it had a different layout, you gutted this to the studs and you're starting fresh with a brand new design. What can a homeowner expect in a timeline? Like, how long should a job like this take, assuming, and there's the assumption, they know how to make the decisions.
Sure.
Forget about delays in product, but what are we talking timeline-wise?
So we think at a minimum, this is a 12-week project, right? So as soon as you have permits, we have to have different trades come in and do all this different work. And so we're looking at, I always tell people, you're probably looking at 10 to 20 people that are going to be in your house that need to come together to pull this project off, right? So that's something to consider for cost. When people say, why does it cost so much? Well, it's 20 people that are here that all have to get here, that have to get supplies, that have to do their work, lots of different crews. And you want the right people doing the right thing. You want the right electrician, you want the right plumber, you want the right mechanical, you need the right framer, and then we got to get drywall and paint and all the whole shebang. So there's rough work, finish work, usually in rough work for 6 weeks or so, trying to get everything ready to close everything up and look right. And then we're moving into making it look pretty.
And for anyone out there to see like the way the house is being protected, again, back to the zipper walls and things like that, all of that comes part of the process in getting the house protected. Now, with the timeline, it makes perfect sense. And I don't remember if you told me this or not, but you don't have x-ray vision.
We don't.
So when you're doing demo, and there could be rotted plywood, rotted wood from a leaky pipe at one point, you can't just cover that up. You have to reframe it, you have to fix it, you have to get rid of the mold or whatever's there. Homeowners need to get prepared for that.
Yeah, they have to. So we typically, after demo, we allot a week for demo, even though every space doesn't require a week.
Sure.
We try to allot a week, and then we allot, what's unique for us is we allot a week for discovery. So that is like, yo, the space is open now. We have all these grand plans. Can we actually do them? Or what surprises have come up that we need to make the homeowner aware of? In this bathroom, there was a vent where we wanted to put a window, so we had to make some adjustments there. Again, all solvable, but we don't know what's back there until we actually get everything opened up. So we try to allot for that time.
And is it safe to say for homeowners when like a vent shows up that you didn't realize or something that you didn't plan on, that interrupts the rhythm of the work?
Yes.
Which then equals a delay in the project.
Yes. Unfortunately.
As hard as it is, it's still a relevant situation.
Yeah, it's the reality of it, right? And so it's just, the plumber's already scheduled, but you want to make sure that the adjustment doesn't hurt anything else. So we have to actually plan. It's not just, oh, there's a vent, move it. It's like, where are we going to move it? Will that interrupt anything else that we're doing? How does that fit into the mix of what's happening with electrical and all of these things? So it's not complicated. It just takes time.
And again, to reflect on this, it's the communication between the homeowner and the contractor. And this is where Veronica and her team excel. The reason why I'm saying that is because when you meet with a homeowner and you explain to them what's going on, and then ahead of time you say, hey, we're going to communicate weekly, daily, and you're going to learn what we did last week, what we're doing this week, and what we intend to do next week, that is where homeowners don't realize the extra value, because a lot of times contractors will get the job started and not call the homeowner. Guys show up unannounced. They're like, what's going on here?
Right.
In your situation, and this is what we look for, is the professional benchmark contractor.
Yeah, we really try to work hard. It's part of a job that's beyond the construction.
Right.
It's the people.
It has to be.
You have to really go the extra mile to make sure your clientele is happy, and they won't always be happy. I tell people, you're probably gonna, week 3, week 4, I'm bubbly and blah, 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 and you're probably gonna like, get out of my face type deal, but you'll get happy again. Once the cabinets come in, our clients, good morning.
Welcome back. This is How It Done. My name's Adam Helfman. This is a great interview. We have Brian Baumann and Chris Osterlund from Rocket Mortgage. We're talking about how to properly finance your home for the home improvement project, whether it's an equity line of credit, cash out refinance, or any of the other options available to pay for your home improvement project. I'm always telling my homeowners, do yourself a favor, get the financing, get the money set up first. It's like the golden rule. Whoever has the gold rules. The contractor is going to be there. Yes, he might be busy, but you could do it parallel. Call the contractor and tell him you're in the middle of getting financing. Let them know that you're looking for the range of what they want, and then focus on the financing. So, gentlemen, of all the financing available for home improvement, let's stay in that space. Which is the preferred way to do it for you, that you would like to do for a homeowner?
What I'd like to,
which is your best? What do you like the best? Equity line of credit, cash out refi, not quickest, but what's the most beneficial for a homeowner?
I'll tell you what I've noticed. And again, I've been doing this for 30 years. I've been with Rocket for 30 years. And what I've noticed over the past, I'm going to say 4 or 5 years, are people have the golden handcuffs. What I mean by that, they're in these fixed rates that are in the 2s. I put a lot of people in these interest rates. I look out for my clients. When there's an opportunity, we lock it in. People aren't moving like they used to. They're improving.
Don't move, improve. That's what we say at Higher Done all the time.
I like that.
Yeah.
Are you seeing that all the time? People don't want to.
There's a time where you need to make a move because you just don't have the space, or you need to change the function of the house. That's normal. But when you buy a new house, do you ever spend less on the new house usually?
80% of all home improvement spending, here's a good tidbit for everyone out there and you guys. 80% of all home improvement spending, which is about $650 billion this year, is spent in the first 2 years of home ownership. Think about that.
Yeah.
So paint, carpet, flooring, kitchen, bath, roofing. A lot of times people are not planning on a new roof. And the insurance company says, hey, we figured out that your roof is old and we're not going to insure you next year unless you get a new roof. Now, average roof, 25 grand in a house today. Are you kidding me? I can't write a check for 25 grand. I have golden handcuffs.
Right.
So I have to call Rocket and say, hey, look, I need a roof. Let's do the most inexpensive line of credit I can get, equity, whatever it is. You guys advise me. I got to pay my roofer. And then I got to send the insurance company, here's the receipt. I got a new roof.
Yeah.
I mean, that happens.
Yeah. Well, your original question was what's the best way to finance some of these things? What's our favorite? And so what I would tell you is it depends on the person's situation. If you have the golden handcuffs and you're at 2.5% or 3% because you locked in a rate that's just incredible. If you have $300,000 on that loan locked in at a low rate and you need 50 grand, we're probably not going to touch that loan. Now, if you have a 3% interest rate that you owe $30,000 on and you want to take out 150 grand to fix up the house, it probably doesn't make sense to do a home equity loan or a line of credit at 8 or 9%, because if you take and you wait how much money is going to be at the higher rate, you're going to be paying way more to do a second mortgage at 8% or 9% or whatever to keep that 3% or 2.5% 30K loan. So everybody's situation is a little bit different. In that instance, you'd probably just refinance the whole loan at 6%, take the money out, have one new mortgage. Yeah, you gave up the 3, but it was only on 30 grand.
So it can be confusing.
It can be confusing. It's better to just have a conversation with people. So the answer is there's no one favorite way. It depends on the client's situation.
It's defined as the unique situation for every homeowner. And that's why I say to people, the relationship, don't go online, call you directly. You'll talk to them on the phone, a human, not AI, not a robot. Yeah. And you're like, all right, let's talk about your specific situation. And I'm going to put you in the best scenario possible.
You know what I like to do, Adam? I'm going to tell you this. You know what I like to do when I'm having this conversation? I always like to ask them, what's your 5-year plan? What's your 10-year plan? Where do you see yourself?
They're taking me out of this house in a plywood box.
That's going to be a different scenario than I'm moving in 2 years.
My kids are going to college. I don't need 5 bedrooms.
Right. Yeah.
Let me go downsize. But I want to make sure that I haven't done a kitchen in 20 years. I need a roof. I got to fix the house up before I sell it, which goes back to what you said, Chris, early on in the conversation. People, get an equity line or they spend money on their house and then to sell it.
Yeah, they should.
I don't know why they do that.
If they have a dream of fixing up their house, they should enjoy it for a little while. I mean, it's kind of a bummer to fix up the house and go, man, this kitchen I always wanted to do. Well, might as well do it now so I can sell the house for more. It's like, you should have done it 5 years ago. As long as it was affordable, but you should have done it and kind of enjoyed it for a little while before you moved out. But the point I was kind of getting to earlier was, if you move to a new house, you usually spend more. So sometimes if you can just fix up the house you have and make it exactly what you want, that's usually the cheaper way to go. But sometimes you have to move and get what you want. So it just depends on if you can get what you want for the right price. A lot of people are choosing to fix up their house now because of the golden handcuffs. Yeah. So, I think it makes sense.
You know what? I want to revisit that word golden handcuffs. I think that's pretty prophetic. Can you just, for the audience, say, okay, what the golden handcuffs means? And because it's a good term. You said a couple things here. Golden handcuffs, I want to learn more about. However, you have thousands of clients over the years. And you've gone out of your way to tell them, look, you're on a 6% mortgage. It's at 3%. I can save you $300 a month. Boom. You're at 7-8%, or you had a equity line in this. And if you combine them, your payment's the same, but you're going to pay less over time. You have that ability to analyze anybody and their mortgage payments and help them out. Yes?
1,000% correct.
So let's just redefine or reiterate to the homeowner this golden handcuffs. I love that statement.
Well, what it is, and I think that's what's hurt, it really is hurting the real estate market right now, because there's so many people. That's why there's no inventory. If you see a house on the market right now, if you're looking for a home, anything between 300 and 700,000. If it is redone and it is nice, it is going for over ask right now.
Yeah,
and not just in Michigan,
more
not
buyers
just in
than sellers.
Philadelphia, from California to Texas to Maine. It's everywhere in the United States because of these golden handcuffs. A lot of people are locked into these low interest rates and realizing that if I do move, not only am I getting less of a house, it's going to cost me more.
We also have people who are deciding to hold their house and not sell it because of the rate.
That's
Even
right.
if they're buying a new one, sometimes
They're going to rent
they're
it
like,
out.
yeah, I'm just going to keep my old house because I got such a good rate.
2.5% on a 30-year.
Which between us is not a bad move.
Not a
Okay,
bad
well,
move,
here, someone texted in Philadelphia. My mortgage rate is
Shout out
2.89,
Philadelphia.
2.89%, so I can't do a refi. Can you? Or
Well,
not? It doesn't make sense right now.
Well, you
Doesn't
wouldn't.
make sense.
Depends on the equity.
Yeah, well, you wouldn't want to refinance a 2.89%, like with the example I gave earlier. You wouldn't want to refinance that unless it made a lot of sense. Now, if that person wanted to do a home improvement and they're like, hey, look, I need 50 grand to do this, yeah, just do a home equity loan. If you have 2.89%, and let's say in their example, maybe they owe $300,000 on an $800,000 house, and they're like, I just need 50 grand to fix something up. Well, yeah, you know what? Keep the 300,000 at 2.89%, get 50 grand out. A home equity loan might be at 8%, 9%, whatever. That's fine. Because you got 2.89% on 300 grand. You just need 50, do a home equity loan, do the repair that you need, do the work you need, pay it off quickly. You know, you may not love the rate, but it's still the cheapest thing outside of personal loans and credit cards. So do it, get the work done, keep the primary loan. But if that 2.89 was on 30 grand and you want to take out 100,
yeah.
Well, you don't want 100 at 8% and 30 grand at 3. Like,
so you just defined and gave the scenario where anybody who isn't, I call all this fuzzy math. It's not a derogatory way, because the golden handcuffs and fuzzy math combined means that it comes down to one thing. People need to call you. And I'm not saying that just to help you out. I'm saying they need to call you because you guys demystify and you make it. You speak to us, not at us. And what I'm saying is that's a huge value. You're not a salesman. You're here to help me financially so that I can get that beautiful custom kitchen or that room addition or that new roof that I didn't plan out, or the broken pipe from Lisa for her mother.
Tina.
We need Tina
from Romeo, interior designer.
Yeah.
Shout out to Tina.
Shout out to Tina.
Again, if someone needs to call you, give them the number again.
Let me give the number. You ready? Write this down. Grab a pen, grab paper. Here we go. 248-417-0547. Brian Baumann, Rockin' Mortgage. You know what we didn't talk about, Adam?
Do so.
What I want to talk about is the quality of life that you do get from home improvements.
Yeah, it's called the enjoyment value. The enjoyment factor, right?
The enjoyment factor.
There's no price. It's called priceless on that.
Our house, when we bought our house, nothing was touched. We had this bathroom. Can I tell the story?
Please do.
So we had this bathroom. It had one of those jacuzzi tubs that huge, just huge. Right. It's like the step in 1980s, had the pink tile, whatever. The hot water tank
couldn't even keep it full.
No.
So you made
changes. I was getting kettles, heating the kettles, pouring the hot water in.
You were?
Oh, yeah. It was just.
Why didn't you call me?
It was in there.
I got a guy for that.
It was in there. It was in there. I mean, you used it.
It just ended up being
remodeled.
Just remodeled. But I think we're going to go to commercial. But I want to finish the story when we come back because it's an interesting story.
Well, guess what? Everyone who wants to hear this is going to have to go to the YouTube channel because it's the end of the show.
It's the end of the show.
We're at the end. The hour's up.
Go ahead. All right. So anyway, I'm being the frugal person that I was. I didn't want to redo anything. My wife was like, we got to do it. We got to do it.
Yeah.
I said, no, we're not going to do it. And I finally broke down and did it for my wife. It was the best move I ever did. First of all, it made her happy wife, happy life. Secondly, every time I go to wake up in the morning, I'm in that beautiful bathroom. Every time I go to bed, last thing I do, I love it. Do it.
You don't
Life
regret
is too short.
Right.
Never do it.
I say do the project.
Call me up. Let's price it out. Call Brian Baumann from Rocket Mortgage.
Give the number again one more time.
248-417-0547.
Okay.
Let me help you.
Gentlemen, thanks for coming on the show today. My name's Adam Helfand. I want to thank everyone. Don't forget, hireitdone.com. All this is repeatable on our channels. So thanks for tuning in. I'll see you all next week. Have a great day.
Thanks, Adam.